Hey my investing friends, it's time for our June income update of our $123,000 Tfsa dividend growth portfolio. Let's do this! Let's look at our portfolio's dividend calendar for those new to the channel. January, April, July, and October are the big months, and February, May, August, and November are really small. The other months land somewhere in the middle. In June, we received dividends from the following 11 companies. We'll go through each paycheck we received, adding up our totals along the way, starting with the smallest payer, not paycheck. Our first paycheck is $3.79 by Brookfield Corporation, the newest addition to our portfolio. It provides us with 0.2% of our yearly dividend income. This is the first dividend payment we received from Brookfield Corp. Even with the major pullback the past year, this has a healthy 4.6% 5-year CAGR on its stock price and a decent 8.4% 5-year CAGR on its dividend. BN has been growing its dividend for 11 years and has a payout ratio of 9%. With a yield of only 0.9%, this breaks the rule of 12 I go by. If you don't know what that is, click the link in the corner to see an explanation of why we like to use it. Next, we were paid $3.95 from Canadian National Railway, one of the stocks we brought back to our portfolio since selling 30% of our portfolio last September. It provides us with 0.3% of our yearly dividend income. This has been growing its dividend for 27 years and currently yields a healthy 2%. It has a solid 12.2% 5-year CAGR on its dividend. However, its most recent increase was only 7.8%. It has a safe payout ratio of 39%. At the current growth rate, this should be doubling its dividend every 6 years. That's what I like to see. After 2 paychecks, we near $10 at $7.74. Next, we have Blossom Social, the free portfolio sharing and social investing app that I love to use daily. You can see all my trades and posts live with one click in the link below. Now for real. Our third paycheck was $23 from our one closed-end investment fund, Canoe EIT Income Fund. It provides us with 3.6% of our yearly dividend income. EIT has a great 5-year return, much better than the S&P 500 as you can see in the graph. For those that are tuning into our channel for the first time, I am not an income investor. I've been wanting to sell it for years, but just can't get myself to do it. It is a tiny position in the overall portfolio after all. After our first 3 paychecks, we are at $30.74. Next, we were paid $71.19 from Fortis Inc. This gives it a weighting of 3.8% of our yearly dividend income. Fortis has been a stable and steady grower over the years, with a 6.3% 5-year CAGR on its stock price and a 5-year CAGR on its dividend of 6%. It is yielding 4%, which is 10% higher than its 5-year average yield of 3.6%. It has a safe payout ratio for a utility at 76%. After 4 paychecks, we finally break $100 at $101.93. Now for our 5th paycheck, we were paid $79.94 in dividends from Manulife Corporation. MFC provides us with about 4.2% of our annual dividend income. Manulife Financial recently raised its dividend 10.7% and has a dividend 5-year CAGR of 10%. It is currently trading at a yield of 5.8%. Its payout ratio has been creeping up and now sits at 46%. After 5 paychecks, we are at $181.87. Our next dividend received was $112.81 from Pembina Pipeline Corp. It pays us 6% of our yearly dividend income. Pembina Pipeline is trading above its 5-year average yield of 6% with a yield of 6.4%. It recently raised its dividend 3.6%. It has a 4.6% 5-year CAGR on its dividend. Pembina has only recently started growing its dividend again, with a 2-year streak. Its low 59% payout ratio means there is plenty of safety to keep growing it over the long term. Just past the halfway point and our first 3-digit paycheck, and we hit $294.68. Next, we're paid $113.95 from Fiera Capital Corp. It also pays us 6% of our yearly dividend income. Fiera has crashed this year and now has a massive 13.3% dividend yield, which is 68% higher than its 5-year average, and that has been creeping up over time. It still has a 4.2% 5-year CAGR on its dividend, however. Fiera has a 2-year dividend growth streak, though I do anticipate a cut in the near future unless it gets its AUM under control. For 2 quarters now, its LTM free cash flow doesn't cover its dividend. That is not sustainable. After 7 paychecks, we're at $408.63. Next, we received $132.44 from Enbridge. They provide us with 7.7% of our annual dividend income. It is trading with a yield of 7.2%, while its 5-year average is 6.6%. Our yield on book has dropped to 7.5% after picking up some shares. Enbridge still has a very respectable 7.3% 5-year CAGR on its dividend and has raised its dividend for 27 straight years. I'm hopeful Enbridge can raise its dividend closer in line to its 5-year average CAGR. With a payout ratio of just 65% of cash flow, it has a safe dividend despite the high yield. For some reason, all the pipelines have been high yielding compared to their 10-year averages. After our biggest dividend, we hit $541.07. Next, we received $50.08 in distributions from SmartCentres Real Estate Investment Trust. They still provide us with 7.9% of our forward annual dividend income. They are trading above their 5-year average yield of 6.2% at a yield of 7.6%. Wowzers! SmartCentres has a 5-year dividend growth rate of 1.6% and shrinking, since they haven't increased dividends since 2019. Their AFFO payout ratio remains high at 89%. The Bank of Canada is scheduled to announce the overnight rate, i.e. the interest rate, at the beginning of July. Keep an eye on its interest payments. With this monthly distribution, we're at $591.15. Next, for our 10th paycheck, First National Financial paid us $50.40. It provides us with 7.9% of our annual dividend income. It has a yield of 6.3%, which is 10% higher than its 5-year average of 5.8%. It has a 5-year CAGR on its dividend of 5.3% and has a dividend growth streak of 11 years. After 5 years of distributing a special dividend, 2022 was the first year it did not. If things turn around in Q4, we may receive a modest one if management can't put the earnings to better use. With our 10th paycheck, we are at $641.55. And lastly, Riocan Real Estate Investment Trust paid us $65.07. It provides us with a massive 10.4% of our forward yearly dividend income. Riocan has a 5-year average dividend yield of 5.8% compared to the current yield of 5.6%. It has a 5-year CAGR on its dividend in the negative still. However, Riocan has raised its dividend 2 years in a row since it cut its dividend back in 2021. Currently, it has a payout ratio on AFFO of 59%. Let's see what the coming months ahead and high interest rates does for its payout ratio. So after all 11 paychecks, our grand total is $706.62. Our 3 largest dividend payments accounted for $359.20, or 51% of our dividend income for the month of June. We have built the portfolio with a focus on the quality of the company and dividend growth. We also never want to be too dependent on any one company to help the portfolio grow in the event of a dividend cut. As you can see from the portfolio breakdown, no one industry or stock dominates our dividend income. Now, a massive part of our dividend income growth is from the dividend raises we receive. In May, we had 3 dividend increases. In June, we have 0 dividend increases to report. Our forward annual dividend income is sitting at $7,620 with a yield on cost of 7.3%. We still have a lot of cash to deploy this year. You'll have to check out our June portfolio update to see how much and what we were buying in the month. As we get closer to maxing out our Tfsa again, we expect our dividend income to snowball faster. Those that follow our channel know that we see our dividends as our little minions that work hard for us so we don't have to. With our minions working harder and harder each year, we can forecast where we'll be in about 10 years. Thank you so much for all your support on the channel and on Blossom Social. Until next time, I'm Mr. Financial.